Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Lucky. How are we doing in YouTube? Good morning, YouTube. Welcome to the Trader Lab. Thanks, Sparty. Well, good morning, everyone. Welcome to the Traders Lab. I am your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all welcome to the Bookmap Discord Trader Lab community. This stream's based on using Bookmap order flow tools with auction market theory, using the volume profile as a chassis to help determine participant behavior and also alignment for structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. There's also a library of webinars there that can help you get an understanding of how this process might work and also give you a template that you may follow in order to build out the business side of trading. Now, it is important to understand that the business of trading is not a predictive business. It is very much a statistically based business. And in my opinion and experience, it works very much like gaming in the sense that everything is random in the sense of how any individual trade, actually what the outcome of it is. The thing is, just like the casinos have no control over what the participants do. In other words, the gamblers. And they have no control over the cards that come out of the deck. All they have control over is how they play their games. So they don't make games up. They don't change the games. They don't have variable inputs. They just do them the same way. And the reason it works for them is that they are really based on statistical edges. So if we understand where our edge might show up and we have a plan for that, then we can emulate a successful business process, which is the same as the casinos. Now, of course, like everything, you have to vet this and determine if it'll work for you. And that's what the Trader Lab community is about, building the business of trading. So, general disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab and the community also. So it's kind of a team effort, you might say. And the thing about Trader Lab is not to replicate what any one individual does. In Trader Lab, there are really many different traders doing many different methodologies and integrating what they've learned so far into a business or career-based objective or overall goal. So the thing becomes, it's not about like what I do here in the stream. It's to help traders understand how the market works, why it does what it does, and how to get in alignment with it. And that's a function of time frame, right? But I have found that time frame really is not quite where it's at. It's close, but the time is not the issue. It's the interaction of the participants. And it is that interaction which gives us something that we can use. And by integrating order flow with structure, we might have more timely execution. And of course, you have to vet all these ideas for yourself and determine where they might fit for you. So we're going to start with the RTH Open. Now, what's important to understand, let's go take a look at a couple of things here. This is yesterday's Friday settlement. Up above, let me just see where it is here. This was the highest volume price on Friday, 97. That potentially can become a target. Above there is the ETH high. That can be a target. Now, the thing about this is we had a selling day on Friday, and you might say, well, maybe That's just long liquidation. But we closed yesterday's low, Friday's low, is very close to the micro composite. Let me just explain some of these levels. The ETH highest volume is called the overnight volume point of control. It is like the last retail price or auction, and retail in this conversation is high volume. Just like when you go shopping, high volume, buyers and sellers. If you buy something at retail, there's high volume there. If the price gets too high, you don't buy it. If the price gets really low, the sellers aren't going to keep it on sale. And that's what creates rotations and consolidations. And this is really the basis of the profile. Are we rotational, or do we become rotational and then maybe become directional and then go back into a rotation at another area? All those are consolidations. So it's important that we understand market mechanics. And again, this is not about predicting, because we can't. So instead of focusing on being right, which is our human nature, by the way, approval, ego and all this kind of thing, that has nothing to do with trading. The casino is not in the business to have the gamblers approve or give the house so the house can feel good. There's no feelings involved in gaming. It is just business. This is the business of trading. And of course, psychologically, we are attached to the outcome of every trade. I understand, you understand, but the business doesn't work that way. So part of this and part of Trader Lab is to help you understand the psychology involved in the business of trading and the obstacles we all face. And those obstacles are, I believe anyone can learn to trade. If they have the capacity for it, of course, and they do the work. Whether or not they can trade is a whole different issue, and that's because of the emotional and psychological attachments and the fight and flight stimulus, our primal wiring. All these things will interfere, and that's when you have intentionality, and you'll recognize it. You intend to do something, and you do something else. Why does that happen? It's because your emotions will supersede your intellect. It's because your intellect, let's just assume for a moment, your intellect evolved over your primal wiring, the thing that kept you, away from the saber-toothed tiger and whatever other creatures were running it down. You didn't think about it, you just reacted to it. So that primal wiring, while it's under the hood, it can supersede everything. That is, I believe, our biggest obstacle. So how do we get control over that? Well, trade plan, statistics, and the statistics make an emotional state, which is a non-tangible state, but a chemically induced state. Having a trade plan with statistics, same as the casino, statistics or edge, gives you something tangible to take control of Hyde. I call it Jekyll and Hyde. Hyde's the lunatic, So the lunatic that resides in all of us is Hyde. Just a name, and I figure it's a pretty good one. So how do you get control of Hyde? Well, statistics. So let's take a look at starting out. Now, by the way, if you have questions, please post them. I can't see your questions until I take a break and come up for oxygen, which I will do. So I'm coming to the RTH Open. I'm in Central Time Zone, so 8:30 my time, RTH Open. Now remember, this is the highest price. It's called the micro composite volume point of control. So in the most recent consolidation, that is retail. In the ETH, this is retail, lower time frame, but it's the last auction. Yesterday's low, so we're gapping, we're opening lower outside of range. And that gives us, what is a gap to settle? So our first trade, possibly, and we don't know, is if we open and we test the ETH volume point of control, we find buyers down here, we can then roll to the upside. And that gives us ETH mid and settlement as primary targets coming up. Then, subject to what we see, we can either keep going, just letting you know, to here, which has about a 30%-ish probability, past performance not indicative of future results. By the way, the ETH mid, I'm going to give you some stats. You have to vet them for yourself. 68% probability we get there. Taking out the first hour's high, which we will get into, about a 67% probability. Taking out the previous low, about a 64% probability. Taking out the first hour's low, a 61% probability. And the overnight low, a 70% probability. So we've got two sides. So today we were looking for whatever the market offers, but I've posted in the Trader Lab, but I'm not saying I can predict anything. We were looking for two-sided trade and the possibility of what's called the neutral day. And this is all before the market opens. Neutral day means we take out the first hour's high and the first hour's low. This is also a viable target. This is a target. This is a target. And if we get rolling, not a recommendation. Down here, not a recommendation, just saying. So now, this is before the market opens. This is Trader Lab because we're not making it up. We are subject to randomness. So, we all, if you will, suffer through the random rotations. And the outcome of every trade is random. What we don't do, if you're in Trader Lab, is make it up as we go. Now, if you want to make it up, then that's kind of more like a video game, I think, and it's not business. Losses or overhead and cost of production. I mean, the gamblers do get paid by the casinos. Right here, before the RTH open, and one of our traders in Trader Lab pointed this out. Thanks for doing that. This is absorption. So we had sellers here, and this is right before the RTH open. And we see a buying iceberg. This is the stop and iceberg detector. I find it very useful. Now, I can look at this and surmise what is going on, but it's good. So if we see delta, which are sellers, and you can see this is also the delta sitting over here, called the chart volume delta. What it does is it only looks at the delta that's visible here on the chart. So if I scrunch this up, you'll see it'll bring more in, but I want to see the detail. So right here, it's the sellers. So why didn't the market go down? It's because of these icebergs. You've got about 500 in here, more or less. And it's some sell stops. Absorption, that's the absorption detector. So I've got a confluence of inputs here in order flow that suggests to me an upside rotation. So this takes me into the RTH open. Now, follow closely. Take notes or think about what you see and how you might integrate this into a trading process. Yesterday's low, remember, open, lower, outside of range. That's a gap. What do we tend to do? Maybe fill the gap. What was the condition of the market on Friday? Sellers. Okay? It's important. Now, write this down. The market goes up to go down. And I hope you're taking notes. And the market goes down to go up. One moment, guys. Check. Okay. This is for Discord. Lets me know that there's actually audio going out, which is also always helpful. So this is the RTH open right here. Now, this is the overnight volume point of control. Remember, it has an 85% probability. So I'm looking at this as a level to test. I'm looking at this, which is the highest volume for this whole consolidation we're in. So the market has a tendency to come back to these levels and check them. So for me, I am looking for a test and longs somewhere, and that's the part of the joy of trading. There is no precision. And let's go back to our statistics. The ETH mid, if we get a long, 68% probability. And getting to the settlement price is then a gap to settle. So this and then up. We'll see. So now let's get into the microstructure. I'm taking my time, guys, because I want you to understand how pieces come together. It is a confluence of pieces. And the reason for the confluence of pieces is we are in a multiple time frame. I think of them as fractals. So when I'm looking at these higher time frame locations, the market is generic in its behavior. It likes to check volume. It's like you going to the store and checking a price on something. Is this a fair price? Is this a fair price? Because this is where the volume was. If it's too low, and this is too low, we can go the other way to try to find a price that's too high. And if we find a price that's too high in any fractal or time frame, we can come back to these open targets or not, part of the joy. So let's take a look. RTH open. So remember, over here, absorption. Now, this is called the developing volume point of control. What it measures is the developing volume in the RTH session. It starts at 0. So as the volume comes in, it's going to give me an idea of what the participants perceive as a fair price. If we are moving away from this, it is suggesting that this price might be too low. If we come across it, it is then suggesting two-sided trade or rotational trading or balance. And that could change the configuration. So in general, in the market, there's directional movement, range, and then there's rotational movement. They're both separate as far as how you might trade them or define them. That's called context. So let's look at the beginning. Hope you're getting something out of this. I try to do something a little different every time I stream. Right now I'm going into really more concept and trade plan before the market even gets to where it's going. One moment here. One second. I got to move some stuff around here. Sorry about that. Okay. All right. So this is developing volume point of control. I see the delta. Now, what is delta? Aggressors. What makes up delta? Stops that become market order and initiators. And the market is short from Friday. Let's go back. So we have our open. We have our yesterday's low to fill the gap and then potentially to settlement. So let's look. What do we see? I see buyers. That's lovely. I see selling icebergs. Now, the question becomes, when you see an iceberg, which is a limit order or seller, and we see our buyers, so we have buy stops, but only one buy stop. So it is really the delta. This volume is more based on, as far as using order flow again, that even though we have passive sellers, the question becomes, do these buyers, since there's only one stop, who are the buyers? It is initiators, in my opinion. Now, I'm not going to get too deep into what's responsive buying and what's initiative at the moment, but let's assume at the moment the buyers are attempting to take control, and here's the sellers. So the question becomes, when you have an iceberg or a sequence of icebergs, it's like Pac-Man. Here's a good way to think of it. Pac-Man. Are the buyers absorbing the passive sellers? Now, there's two ways. By the way, the passive side, icebergs have to show because they're passive. And the limit order book is passive, and they're sitting over here, but we won't see them transact. We'll see these guys transact, the icebergs, but we won't see the passive side in the order book transact. The way we can tell is either the absorption detector, this thing, is going to show us absorption, or it's the behavior after the fact. So if you see the buyers, and then we see buyers and buyers, and then we can exceed this, what that is saying is the limit order book, the passive buyers are here and here and here. So let's label this. I call this a variable high volume node. I hope what I'm doing, which is detailed and minutia, is helpful. You might find that this is too much detail. I really don't know. So you'll let me know. Now, VPOC migration. Well, let's talk language. I don't use any indicators per se like most retail traders do. What I want is to be in real time as close to where the rubber meets the road. That's what order flow is about. If I can interpret what's happening here, I don't need an indicator that's lagging and maybe conflicted to tell me what's going on. I see it right here. So if I want to get long, I'm going to be doing it right here. This is support right there. Why would it be support? Let's go think about this. If this is too low, right there, and we know the buyers were here, and now we come up, now let's look at this, and we're going to see some change in behavior right here, all in the micro. So sellers were here, by the way. They got absorbed. Remember, absorption. Buyers, 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 selling iceberg. What do I see here? Not much. What do I get? I get my sellers. Where do they come? Do you see this here? What happened here? These sellers selling Delta were absorbed. That's why I didn't keep going. Did I know it? No. But what do I know? Let's come back to what we know. Buyers absorbed these sellers over here, right? What do we know? The buyers were here. The buyers are here, 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 clueless. Back here, we have the buyers. Buyers are there. There's a buying iceberg. Sellers are here. What's sitting under here? The buyers. Do we know? Nope. What happens here? We come back up. These sellers are in control. These buyers and any buyers up here are under the bus. I got my resistance here because we're below this buyer. This is nuanced, and this is just the way I interpret. And I got my sellers here. Looks like it's going to zero. Maybe it will. But what do I see? Buyers are here, buyers are here, buyers are here. That's right here. My buyers are here. This is my support. Buyers, 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 buyers. Now, sellers are here. What happens? Buyers are here. There's an iceberg. So what I'm seeing is I have my buyers here. I got my sellers down here. Nada. Zippo. They're not getting anywhere. Icebergs are over here. The icebergs are up here. So I got my resistance here. I got my support here. If I get long, my stop's got to be under the opening swing low, and then I'm going for overnight mid statistically because I see my buyers. Okay, now we're going up. We got to get out of here or else I'm going to take a stop. Let's watch. We exceed this, and I'm seeing selling icebergs. I'm posting this in Trader Lab and going, this is interesting. Oh. Scale is here ahead. I actually scale right ahead of them. I always give them about 2 ticks. VPOC migration. What does this say? Let's speak the language of the market. This says that this is too low, and currently this is the fair price. Why, you ask? There's more volume here than there is down here. So what does that tell us? It tells us that at the moment, this is the fair price. The price of your can of tuna has moved from here, retail, to here, new retail price. The buyers and sellers are interacting, and wherever high volume is a fair price. Now, this changes, obviously, and it also operates in all fractals and time frames. Let's watch. Now, this is interesting. They're all interesting. You know, how can you not find this interesting? Oh, and our next target was here. 2 ticks ahead. So my long was strictly here to here. And at that was it. And it was to there, actually. So that's my long trade, and I'm done with my long. Any questions on the long? Yeah, thank you, Marty. How are we doing in YouTube? Everybody conscious? Yeah, Zoltan, devil is in the details. I agree. By the way, please give a like if you're finding this interesting, supports the channel. I am currently sitting on a long, but that's not material. I'll get to it. This was not an easy day. Not that, you know, and you'll see why. So up here, so what I'm doing is, and I'm narrating all this in the Trader Lab, which I do when I can. I can't do it all the time because when I trade, I have in my trade plan, unless I have a trade on, so I'm just managing it. When I'm looking to actually trade, I cannot multitask well because I really need to be focused. So I don't post, but sometimes I'm posting very actively. It just depends if I'm managing a position. That's not a big deal for me. But actually not getting myopic and keeping a lot of things in my head at the same time so I don't make an error takes concentration. So no email, no chat, nada, zippo. So let's look at this. So I get my target. Now I know the possibility is, and let's talk possibilities. The possibility is, since we had selling yesterday and Friday, and write this down. The market goes up to go down. The market goes down to go up. Friday we went down. So what might that mean? Well, it might mean that if we went down and we open in a gap, that we're going to potentially fill that gap and then come up. Market went down to go up. Then the question becomes, once we go up, are we going to go down? So that's what I was looking at in my trade plan. Now, so you guys understand, a trade plan is not a prediction of anything. It's a alignment process. So when you see behavior, you anticipate to participate. Write that down. These are little things that I've created over the years, and it's part of the language in the Trader Lab. It's to anticipate behavior, not to predict it. So part of anticipating behavior is to define the condition of the market, which changes. So nobody, well, if they do, they should come to Trader Lab. Nobody predicts anything. It's about alignment. So here's what I'm seeing. I'm seeing the selling icebergs, and that is giving me, shall we say, a pause, because the overnight mid and the settlement, remember our targets here. VPOC migration. So what this says right here, and this is very important, I'm going to mark it. Remember, I follow a process, and I call it follow the yellow brick road. It's kind of like from the Wizard of Oz, And what the yellow line is that volume. Well, as it shifts, it is really telling us what the participants think of pricing. So, and the thing with pricing is it takes place in all fractals and time frames. So even in here, there's an auction. And I'm going to show you microstructure. So I'm going to help you go down in time frame as you think of it. So this is our target, at least for me it was. And at this point, I'm thinking shorts. Let me show you. So right here, now I'm going to take you down in structure. And I hope you get something out of this. And I will check if you guys have questions, please post them. So we're going up and I'm seeing these selling icebergs. And I posted in Trader Lab. So guys, pay attention to these icebergs up here. Because the gap to settle is a reasonable trade. Getting beyond this, if it's only responsive buying or shorts getting out from Friday and then new sellers come in, then we have the potential to come out the bottom. So that's kind of where my brain is at. I'm saying my brain is at now. It's not up to me. Remember, it's up to the participants. So I'm seeing the icebergs, the icebergs, the icebergs. Now I'm going to label this. Let's look at the microstructure. I'm going to take it down, and as you think of it as time frame. A way to think about this is Russian dolls, Matryoshka dolls. I like to use that as a kind of an analogy because, and I hope that, Ned, correct me if I'm wrong. It is an analogy, isn't it? That what happens in a higher time frame happens in all time frames. And for me, the clock isn't part of this. It is the fractal or the interaction is what creates. Because here's buyers are buying up here, icebergs are selling up here, and down here we have buyers here. You had a seller there. There's the delta. That's the iceberg. You have a buyer here. That's absorption. So I got absorption here and the sellers here. Who wins? Right here is our passive buyers. How do I know? Because we went up. Otherwise, no way to know. What happened over here? Passive buyers. Buyer. Seller here. Sorry, Charlie. Remember Charlie the tuna? Passive side here. Passive side here. Sellers try here. No bueno. buying icebergs. Up here, selling icebergs. So buyers here, buyers here, buyers here, looking for it to go to the moon, right? Maybe. Let's watch. Now, this is the high volume in this structure. This is a consolidation, as you guys think of them, and so do I. But in volume world, it's represented by a consolidation, and it's represented by volume and delta. So the aggressors are the green bubbles, delta, and the passive buyers are under here. Again, we don't see them. We see the reaction. So I got buyers here. 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 And as long as I'm above these sellers and these buyers and that buyer, I'm good to the upside. So let's watch the change. Very important. Here's order flow. This is why it's so important. I'm watching the icebergs and I'm thinking, this could be a problem. They are front running the settlement for those who are, I don't go gap to settle. I go gap to 2 ticks in front of every target. Why? I've been left, as they say, at the altar too many times, and I've been trading almost 45 years. At this point, I say, here, you can have take 2. Thanks. Now let's look at the change. So I get my buyers here, and we have to keep going. The buyers are here. When I break below, right here, it changes because now these guys were absorbed. And we could see the icebergs, but who knows, right? So it's what happens here. Break, check. Where's the high volume? Let me come back so you can see it. It's right there. So this is the same thing in micro or fractal as those volume points of control I was pointing out before, which are your retail pricing, remember? The variable high volume node is the same as that little high volume, except this is down in a shorter time frame. The ETH volume point of control is where the highest volume was from the ETH. That's the same thing in a higher time frame. This is from Friday's RTH, the highest volume. It is from RTH, higher time frame. So that's high volume, and even in here, it's high volume. They all work the same way. So once you understand the concept, you can now break it into, quote, time frames or fractals. I call them fractals because there's no 5 minute, 2 minute, 1 minute, anything. It could be 10 seconds, and I can analyze it. So that's why order flow. So when this happens, and we come back here, it has changed the context. The context now is called mean reversion. Remember, I said there's multiple contexts. One is the directional context, and the other becomes a rotational context. This is a change in behavior. And nobody knows until you know after the fact. Nobody knows, so don't worry about it. But what do we know? We're in 8 minutes. I've got the icebergs have been selling. Icebergs have been selling all the way up. So I'm thinking, two-sided trade. But when does it change? Here's the change. So right here, now I'm flat, and I'm looking for a short now. And I posted in the Trader Lab that to consider a change in context to mean reversion. This is now the mean. Mean reversion is outside-in trading, rotational trading. So it's a different plan that we have in Trader Lab, and you have to vet these for yourself. So let's look. So we know the sellers are here. We know right here might be, I always like to use the term might because that's as close as you get in trading is maybe. Have you ever thought about that? It's maybe. So maybe, get back here. Close enough. So maybe this is too high, and maybe the buyers under here are now in trouble. Maybe if I come back up here and I get these sellers again up here, these guys, and these. Now, here's something to understand. There's a passive side here. We can see the icebergs. They're passive, so that's limit. But there's other passive sellers too, which we don't know. Now, we know about the icebergs. We don't know if these guys, these buyers are going to consume everybody and keep going, right? Or if the stops now get pulled out. There's the stop. So now I'm in mean reversion. So here's what I know. I know this is my retail price. It's the mean. And I also know that this at the moment is too high. I'm going to get to it. Hold on. I got to move in order. Sorry, guys. I've got these positions. Don't mean to. Just market is slow. Okay. Okay. All right. So this is a potential short setting up. Now, for me, once I see this, I know the buyers are in control. I know this is the retail price. I know I can rotate down, and I have my variable high volume node here. This was too low. So I know the following. If I come back up here and I see my absorption again, I can then consider the possibility of coming back here and coming down here because this was too low. Let's watch it. Remember, potentially too high. So let's see what we got going on. Right here, this is too high, right up in here. So when I'm looking at this, I go, okay, I'm in two-sided trade. This is a change in behavior right here. So now, subject to your skill set, this is a short or nothing because it's really up to you. It's not up to me. When I break under here and I take the stops at the mid and the VWAP, I'm going, all right, now I want to see the test when we come back here, right here. Why? Because this is where the sellers took over and this is too high. So I come back up here and what do I see? I see buyers. I see absorption here, sellers. I'm seeing my selling icebergs again. So I'm looking for a short. And the idea of the short is to come across here and come down and come out the bottom. That's my plan. And this is support because it was too low. Let's just watch the trade. Variable high volume node right there. If you see trading like shopping, because you're all shoppers, we know how to shop. You guys are shoppers. Trading is shopping. The market, the process, why we have a market is to figure out what something is worth. And the way it does it is something called an auction. So up, down, what's too high, what's too low, 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 except these are in the middle of nowhere. So how do we do this? Once you go into mean reversion, which is this, you're looking for outside edges to come back across and come out the bottom. That's what you're looking for now. And that's what I was looking for. So this is a short. There's your seller. Now I'm going to take you down one more level in the microstructure. Watch. Now, so this sets up looking for shorts. Now, in mean reversion, and write this down, you do not, in my opinion, and this is up to you, you got to vet this, to operate here. You do not want to sell the middle. Why not? Mean reversion is a balanced trade. In other words, it's outside in trading, so rotational trading. This is the mean. This is like your fair price. If this becomes too high, this is the shoppers going, I'm not paying that. And then this is retail, then the idea of mean reversion is to come back here. Then if we come out the other side and we don't know where the other side is, this is also part of the thrill. Where is it? Are we going to come here or are we just going to come here and then come? See, all this is part of the joy of trading. So we don't know. So the rule, if you will, and you have to vet this, is if we are in rotational trading, it's outside edges only. You do not trade in the middle. Write that down. Because what we're trying to do is if we think this might be the high of whatever, then we're looking not to get short here because we can come back out here or do whatever, or come down here and do whatever. So mean reversion, different plan. It's a plan in a plan. So this is where the sellers took over. This is the outside edge of the consolidation. This is too high, too low, too high, too low. Retail fall out. It says too high. And this is the outside edge. This is called the low volume node. And what a low volume node is just an outside edge of a consolidation. And they're created by this because there's no auction. The chop chop is an auction. When you get this, it's just because it took stops. 52. Thanks for playing. Brokers are going to send them a gift basket. Now, we come back up. This is the outside edge of this consolidation here. So you have your low volume up here. Let me just throw it in here to help you guys see it. And you'll notice the alignment that it has. It's with the bottom outside edge of the consolidation we broke out of. So this here is the bottom outside edge. And this is right here. So this is the low volume. It's the outside edge. So you actually can see, and the other outside edge is down here. Low volume, outside edge. So, and that is over here. You'll notice where we come over here, and then we mean revert. So mean reversion. So my plan after getting the settlement or near settlement is short. So I'm looking for a short, just me. So this is my short here, and then I'm looking for it. Here, I'll show, I was going to show you the micro. Let me show it to you. So I have this level, I have this level, and I'm looking for my sellers. I see my icebergs, Oh, glad I got my next target. That was nice. And now I'm looking for a short. Now this is a very aggressive trade because this is right here. But so let's look at it. Now I'm reading order flow. So I have my buyer here, sellers, sellers, buyers, buyers, going to the moon, right? Sellers are here. What is different right here? The sellers are here. The buyers threw them under the bus. The buyers are here. This is my resistance. This is my resistance. I know the market is long and I want to be short. Which, who knows, right? So right here, there's my buyers, icebergs. What happens here though? My sellers now are here. They're below that buyer and that buyer. That suggests to me they were absorbed. And of course, the icebergs are confirming that to me. There's my seller. Here's my buyers. Now, I'm going to take you down into a fractal. Now, the high volume is here in this little minutia right here. This is an auction. And in this auction, the buyers ran out of gas and the sellers took control. The buyers come back here. If I can't get above here, so this right here is a consolidation. So right here is the over-under. So right in here is a short and your stop needs to be above this. And let's follow where the support is. Now there's two ways to trade this. I'm also going to, so this is the next target, this here. So that was fine. And at this point, I'm thinking out the bottom, and I have targets here and possibly here, right? So come down to here. Now there's two possibilities. One is, well, this is a target, and then out the bottom. So that's my trade. So short to here, and then, you know. So that was my short. So I'm thinking shorts now. Watch what happens here. VPOC migration. This is now too high. Same process, but now the volume point of control is moving in the other direction. So I'm going, hey, that's great. This is looking really good. You ever have that thought? But I don't know. I do know this is support. And if I can get below this, I have a good shot then of going on to my other targets. I take this out. Where do I come? Right here is the opening swing low. It's right there. IB low. Opening swing low. So I'm kind of rooting for the team, you know, because I'm saying, oh, we got them now. These longs are going to get run over. They have their opening swing lows here. They're going to have their stops. This ought to be a piece of cake. You ever say that to yourself? Now, the fact that I'm hearing that chatter in my head has nothing to do with what I do. Oh, my long is still percolating. So this is the opening swing low where we had our buyers. So the buyers took control here. So anyway, so the short down to here and then holding. Now, this is a surprise for me. I mean, doesn't matter, I can't predict anything. When I come across, I realize I'm still in mean reversion. So now I'm looking at it and I'm saying to myself, well, this is fun. Now what? Well, I know my shorts will have their buy stops over the last swing. Okay. And I know I've got my settlement and I've got this as a low probability, statistically based target of around 30%. And you have to vet these for yourselves. Past performance, not indicative, as you know. So this now becomes my variable high volume node. Let me show it to you and how this works. Now, the fact I'm in a short doesn't matter. It truly doesn't. It's just random, right? So I know a couple of things. I come down here, over here, I come back across, I'm still in balance. In other words, instead of getting directional this way, so I'm directional this way, looking for it to fall out the bottom. It rotates down, looks like it is. As soon as I come back across, I realize I am still in two-sided trade. So at this point, I come up here. Oh, something I forgot to tell you. We have something called the IB stat. Now, the IB, there is, in this configuration, a 67% probability we take out the first hour's high, and about a 61% probability we take out the first hour's low. First hour's low, first hour's high. So I know the probability is higher going this way, but this is also very important for the possibility to take out the low. So I'm conscious of these things. And I know the buy stops are above this swing. So once I come down, so if I take a short, I'm going for this, right? So that was a target. And then looking for the continuation. If I come back above and cross, then I have a problem with the short, and then these guys can get squeezed. So I'm in two-sided trade. VPOC migration. This suggests lower. And then bang, and all the way back. So it just completely scrambled my trade. So let's look some more. We come outside, and I come to my high volume right here, right? I'm seeing the selling icebergs. I'm seeing the absorption, and I'm thinking all we did was pick these guys out. We now tag the settlement. And right here, I'm going to show you, I took a short here. I took the short here to here, mean reversion. I'm still in a outside in mode. So this was a short, got a scale, and then I'm holding for it to come out the bottom. That was the trade for me. I got taken out of that. So I get risk neutral. I put my stop over here. I anticipate a test here because that's the structure of the trade. I break here. Right here, the trade is still working. I come back here. I'm looking for these icebergs to put a cap on the market. And I get taken out. Okay? So that was that. And I'm going, now what? VPOC migration. This is suggesting higher. And of course, it's different than what I'm thinking, but it's not my job. So I know I wanted to tell you something. Can't remember now. So we come out the top. I have VPOC migration. It is suggesting I'm going to continue higher, which is a bit confusing for me, just saying. This is VHVN. We come down here. So I'm right here, I'm confused because it can go either way. So what I'm trying to do, and there's no silver bullet, guys. What I'm trying to do is say, well, this is not what I want to see, because what it's saying, let's look at the language, is that we are accepting higher pricing because there's more volume here. Now, I also know there's stops under here, and this is too low. So I know that if I come out here and come back in, I can come here here and maybe fall out the bottom. That's it. So anyway, I don't have any of these trades. The last long I took, let me see where it was. I got to go take a look at it. It was back. It's back there. Now this, so you understand, right before the stream, I was looking at this, and this was my location. We broke back above here. I took a long, and the idea was to come back here and come out the top and go here. So this was my target. I don't have any targets above here. So kind of a surprise. I was kind of thinking we'd be going the other way, but that's trading. So anyway, this was my last long that I was holding, and I'm now flat. Not a recommendation. That's what I was saying is I'm managing a trade, but So let's look a little above here. This also is a viable target. I don't have anything on for it, but it's where is it here? A 31% probability. So the thing is, this is about 31%. This is in the 30s also. Past performance not indicative of future results. That's part of the reason, statistic while I was, after getting a squeeze, I was looking for the short side. And it doesn't mean that we won't come out the bottom, So, and if we do come out the bottom, then 67 might be a target. And this is also a target. I have the possibility of something called a neutral day today. And that means we take out the first hour's high and the first hour's low. At the moment, that's not happening. We did get yesterday's low. The probability of taking out yesterday's high and low is about 10%, not a recommendation. So I don't know if we're going to get here, not my job, right? And we have Powell speaking and, some other fun things going on today. Any questions, guys? Now I'm going to come up, look at your questions. Thanks for your patience. By the way, if you're visiting in YouTube, thanks for stopping by. So the Trader Lab is a open community. There is no cost. It's in the Bookmap Discord server. There is a link in the bottom of YouTube if you want to visit Trader Lab. There's a library of webinars you can watch on this process covering many different configurations. Live streams and live narration that were recorded up to 5 hours of real-time narration, so you can see this as it develops in real time, not just what happened. But the thing about knowing what happened is what helps us gauge what might happen, not predicting what's going to happen, but trying to get in alignment. This is a key location. This might be a short developing here. It's not a recommendation. I'm going to take you into microstructure. It's also a dangerous short, but they're all dangerous, right? What's the worst that can happen? Oh, you take a stop. You don't want to take stops. You got to not be a trader. Stops protect your account, and just like the casinos, there is such a thing in business called overhead and cost of production. That's what this is. You see the icebergs? So we got loads of selling icebergs and absorption. That's what this is. Absorption. This suggests the possibility right here of coming back here. Right there. So that would be a potential short. I don't call trades because I take stops too. Everybody does. Just part of the business. So this is the target for this trade. If we come across, then there's going to be mid and VWAP and possibly fall out the bottom. That's, what do they call that? The Hail Mary pass. This is a Trader Lab structured short, subject to my trade plan, not yours. Other traders are going to be long, going for wherever, and that's fine because everything is correct. If you have a trade plan, your job's to follow your plan, not to go, gee, what is it going to do? How about you don't know and neither do I? Write that down. The business of trading is not predicting. And I know we all want to predict, And the idea of predicting is to be right. How about you can't be right? Maybe all you can do is have it just like the casinos. What is the right hand that's going to win dollars for the casino versus the one where the gamblers win? How are they going to know that before the fact? They can't until they turn the cards over, right? Well, how can we? It's very important. To be in this business, you have to detach yourself from being right. It's very hard for us to do. And that has to do with the fight and flight and all this kind of thing. I don't want to get bit by the saber-toothed tiger. No, none of us do. But in order to bring home the bacon, you got to be able to go out and hunt. And you have to be willing to deal with the saber-toothed tiger in order to not starve. So in our business, we have to manage our fear of the saber-toothed tiger. And that's what statistics do for you. They take this nebulous, unknown participant behavior, which has structure but not predictability, try to get risk neutral. And where are the stops under this swing? And if we can stay under these buyers, then we can come back here. If we can't, then there's such a thing called a buy stop, which protects your account, and you go on to the next trade. That's about as deep as trading is. We can make it into a lot of other things, I think, but that's not what trading is. Trading is not predicting. I know we can all say, I think it's going to go here. Well, I do too. Why? Because I have a structured trade that thinks that this might be where it goes. I've hit a 31% probability target, and we have basically checked Friday's highest volume. If this is too high, which we don't know, what did the shoppers do? Well, let's get in a car. Let's drive back to the supermarket because we can't, this price is too high. I'm not going to pay it if it is. And let's come back here. That's why this would be called mean reversion. And that's the mean. Well, we don't, and this is also a mean. So we reverted to this high volume. If this high volume is too high, we can revert back to this high volume. I'm in fractals, and that's confusing, isn't it? But that's what this is. Hope you're getting something out of this. Dinosaur person, I just followed the yellow brick road. If I'm short, I'm looking for it to fall out the bottom. That's my trade plan. If it doesn't do it, I change. That's simple as that. There's no rigidity in trading. What we're trying to do is get in alignment with the participant behavior using statistics and auction-based behaviors. If we take this high out, then, we've got more targets on the hit parade. Well, this is still a viable target. And so is yesterday's high. This. It's all possible. So for me, I just, So for example, if I take this short, which I would take, and it's not a recommendation, and it comes out through here, then I go, that one didn't work. That's as deep as it gets with me. But I can't predict anything. What I do, I use order flow. I use market mechanics. In other words, how does the market work? Shopping. Might this be too high? I don't know. Might be, might not be. And I know this is retail in the current auction. This is the retail price from Friday's auction. And it doesn't matter that it did this. It doesn't matter to me. This matters right here. These buyers were absorbed. The buyers here were absorbed. So far, the micro high volume structure is there. That is where the high volume is. It is a fractal. It behaves the same as that, and it behaves the same as this, which is the volume point of control. If this is the retail price in the developing time frame, this is the retail price from Friday. If it's too high, and now I have a fractal or a microstructure that operates the same way. If this is too high, which I don't know, this sets up a short, a stop is here, This is where I'm trying to go, and whatever. And if I get taken out, then that's just one trade. But what's my risk? If I use a limit order and I put it 1 tick or 2 ticks ahead of the high volume, my stop is going to be over the last high by a couple of ticks, not right here, up here. So I'm within, figure 96. Let's just call it, whatever. It's 96 half, 3/4, but let's call it 96 quarter. 96 quarter to 98, 99. 2.5 points. I'm good with that to go here. So if I'm at 96 quarter, I'm looking for 90-ish. Then lower. That's my trade. That's all I can tell you. I don't know anything more about it. But I hope that answers the question as far as how do you use this process. How you guys doing? Is this making sense? How you guys doing in YouTube? This is order flow, auction market theory, and the volume profile as a chassis. And then put a helmet on, because that's trading. Absorption, 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 break, trigger, volume. There's the microstructure, trigger. This is Trader Lab. Buyer, absorption. Thanks for playing. We're going to send you a nice parting gift basket. Pullback. This is a short. This is a short. Stop is up there. Scale is down here. And then you have your helmet on. That's as deep as this gets. If you're making it any more complicated than that, I don't think you're helping yourself. That's just an opinion, not a recommendation. I use no indicators. I have none of these RSI, Fibonacci, Elliott. I've done it all. I'm not saying it won't work for you. It didn't work for me. It was all inconsistent. What do I need inconsistency? The market's random. Do I need to be using random tools? No, I use consistent tools. So this way, it's called anchored inputs. I made the term up. I didn't know. So, a lot of what you see here are things that I developed over many years. And I learned things, I changed them, I modified them. I learned market profile, I think in 85 or 1985 or 1986, something, I don't remember. But, and I couldn't do anything with it. Seemed like a great idea. And it looked like, it was, forget it, And I was still indicator based and trading system based. So I had systems because I was managing dollars across a large group of asset classes. I had to be systematized. And there was no day trading. Okay, it was all position swing trading, that kind of stuff. Trend following. So I gravitated to trending markets, not, chop chop. So, and I also traded spreads and other things. But this is the same business, except it's fractal. And as day traders, because now the technology exists, we can actually do it. Back in the day, I had to pick up a phone and call my guy on the floor. They'd hand signal it in, they'd get it back. The runner would pick it up. Now, when you trade volume, I used to trade volume, so they would just get the fills right away. They just hold on the phone. But different world, right? So anyway, I took these ideas, and after many years, as day trading became viable because of we actually had a dome. I think that was around 2000 or somewhere in there. Can't remember. And it was a limited, we could actually see the limit order book, and it went 10 high, 10 low. That was as far as you got. Today, we can go unlimited with rhythmic data. You can see all the way up. As far as you want to go. You can't see it all here because the volume is here, but you can see it. So anyway, we're going for this. So what do you do with this? If you're short here, this is the mean. So the idea of this trade is to come back here and here. So we'll see what it does. So subject to your trade plan, this is how we work in Trader Lab. Minimum 2-lot configuration. The idea of a 2-lot configuration is to cover your risk on your runner. So if you have a 2.5 point stop from your entry, you need 2.5 points rotation to cover your stop from here to failure. Then you'd be sitting and you'd have better control over your emotions, which are fight and flight. Like, get me out of here. I'm going to get stopped out. You know, all that, right? So you move your stop, here. Yeah, but the trade doesn't fail up here. If you're risk neutral, does that allow you not to put your stop where everybody else has theirs? Does that give you an edge? How do you know? You got to do the work. We have a seller here. We know these guys were absorbed right here. There's the buyers. Why did the market not go up? The sellers here and here who took control, the buyers were here, the buyers are there, and the buyers were here. The stops are here. We can come up here. That's why my stop is not here, or wouldn't. I'm not in the market. It would not be there. It has to be out here. That's why I have to get risk neutral if I can. If I don't get risk neutral and it takes me out, I now join everybody else who takes stops. And it's just overhead and cost of production. Write that down. I know we're attached. See, you need to be journaling. How do you feel? And the other part is, what is the voice in your head saying? Is it saying, I better get out? I'm going to get stopped out? That's what it's going to be saying. I should move my stop to break even though the trade doesn't fail until up here. Is that what the voice in your head says? You need to learn about the voice in your head. I call that hide. Hide is always there. It's the self-talk. And the talk is coming to protect you. It is not trying to hurt you, but you will react to it because it works really well in the outside world. Don't step in front of the bus. Okay. Not a good plan. Well, it's going to give you the same message here. Bail out. It's going to stop you out. I don't want to lose the profits. Isn't it saying that to you? Wouldn't it say it to you? Haven't you bailed out? Move your stop to break even. Now, there are times for that if you've defined it. But if it's impulsive, then you don't have a complete plan that covers all those contingencies. You only need a plan. And here's the thing about a plan. It is statistically based. It is not emotionally based. That's what Trader Lab is about. Among other things, it's about the business of trading and a supportive community. So my trade for me is just sitting short, and I'm here working on my crochet. And as this thing rotates, I'm going from euphoria to depression, to euphoria to depression. Is that how you go? Forlot Tony is asking me if the IB high is a sensible target. Yes, it is. Because here's the possibilities. If this is too high, which at the moment it is, might not stay too high, we could still do anything. Remember, our job's not to predict. Our job is just to take the trades that we are waiting for. So this was a target coming up. It's also a potential short coming back to there and to there. So it can go, if we come here for a lot, it is a good target. That is to me the same target. They're really interchangeable for me because it's a mean reversion trade. Remember, guys, we're trading in something that will make you a little nutty. We're trading multiple time frames or fractals. When we come back here, this is the mean from the bottom up. If this becomes too high, this is the mean from the top down. Isn't that something? So we can go up to here. If it's too high, we can come back here. And then if the market's long, we know where the outside edge is. We can come all the way across to here and maybe mid in VWAP, which would be where stops are. What write this down. Think like a retail trader. Don't act like one. Where's their stops? Mid and VWAP. What do mechanical traders do? They're going to buy the mid and the VWAP. What's the obstacle going to be? Potentially here or here. So I know if I get down here, which is my target, I can anticipate, remember the word, anticipate a reaction here back to here. That's because of auction mechanics and how the market works. The other side of that is we could just, do anything, of course. So that's what I know. And there's more. Let me tell you what else I know. Now, when I say I know something, what I'm talking about is I know the structure because I can see it. What I don't know is what the participants are going to do. So that's why this is a target. It's auction-based. Now, there's something else. You say, oh, really? Yeah, it is. Where's the low volume node out here? It's out here. So let's talk about what it means. This is language, so let's speak market. This is the retail price. Stops are here. Maybe we'll come here and rotate up, or no. If we come below, then this is our outside edge. Think of it this way. This is a consolidation, a biggie. Outside edge, up here, outside edge. What was this up here? Micro, a consolidation here. Short. As we go up in time frame, the consolidations get larger. Here. Now we have a little microstructure here. It's a consolidation. There's volume right there. This is the retail price. This is shopping. What do you think? I'm not paying that. Oh, it's on sale. The retail. No, if we leave it too high. Where's our next location? It's here. Here, down to here. What's sitting over here? Stops. What do we try to do? Trade into the stops. Where are the stops? Think like a retail trader. Under the swings, under the swings, under the swings, and under the swings. Does that make sense? You guys with me? How about a thumb up and hitting the like button in YouTube? Also, subscribe and check off notify so you know when I'm doing something here if you're interested. Also, there's a link down there in YouTube if you want to come and become part of the Bookmap Discord Trader Lab community. There's no cost. And also, here's something else, and this is pretty cool. Bookmap offers a free digital subscription. If you want to get your hands on this thing, which is amazing, I think, it's no cost for that, you then would be a, quote, subscriber. If you subscribe to the free digital version, you would then gain access to all these subscriber exclusive streaming and education, and even have access to the Bookmap Academy, which includes coaching, mentoring by other successful traders, looking what other people are doing. There's no one way to do anything, right? The only way that matters, I think, is if you have a statistical edge, because if you don't have an edge, you're just playing a video game or gambling. I think you're better off going to a casino for that, because they're going to give you the cocktails and maybe the ticket to the buffet. That's how I look at it. I don't see myself as a gambler. And a lot of people think trading, day trading, whatever is gambling. It's not too far from the truth because most retail traders are gamblers. But you can also decide what side of the table you want to sit on. And if gambling hasn't worked for you, then you just might want to do something else. It's not realistic, in my opinion, to expect a different outcome if you're using a process that's defective. The problem for us, and I did a webinar on this, and I like to mention it, is something I call Trader Groundhog Day. That is, you could just close your eyes and push buy or sell. You're going to have winners and losers, of course. Well, when we have winners using a process, we may believe that all we have to do is make it better. I did. And that's what even happened to me when I built trading systems. I thought it would be a better way. So I had more math, more, quote, indicators, custom-made indicators and the rest of it, and I would optimize them because at the time, trading systems were a big deal. And in the literature, that's really what kind of where we were in the development, of the business. So I was managing, as I mentioned to you guys, a large amount of dollars over a lot of asset classes. So I had to come up with something that would allow me to do that. I couldn't do this by hand, and it was just too much. So, it was really automated. I would still place the orders, but it would spit out, where to place the order, where to put the stop, all that was all math-based and optimized. Optimization is curve fitting, so it was continually breaking down. By the way, for a lot, this is our target on the short. Now, it's not the end of the trade. It is a piece of the trade. And then we're looking to see what happens, down here would be the bonus round. High volume is here. So what you can do with these is you can look at high volume and use them as targeting and ways to analyze behavior. We came here, this is high volume. We can react from it. We have to get below this high volume to get to this high volume in a fractal. This is the highest volume so far in the developing daily time frame. It's actually like the moon. It actually exerts attraction because of volume. Mass, think of mass. The volume is a mass. The moon is a mass, and that creates gravitational pull. Volume, resting volume, acts the same way. And as you go up in time frame or fractal, this is a higher time frame. It has more mass, more volume. It acts as an attractor. So this is like a bigger moon. These are little moons, if you want to think of it that way. I mean, I'm just trying to give you an idea how to think about this, not to get hung up on an oscillator or an RSI or a VWAP or it doesn't. They all work at times and they all have a place. I'm not saying they don't work. I'm saying in this aspect of it, you can narrate it based on behavior and understanding this is resistance and this is resistance and this is resistance. Now, if we get over here, then there might be trouble, right? But the trade still fails out here. So we can rotate. And that's why you need a trade management process also. So we can rotate, come up to any of these locations. The trade can go north up to this, of course, or back to the gravitational pull. And if this pulls stronger, it can come here and fall out the bottom. That's also part of my plan, not a prediction. I hope you're getting something out of this. Is this making sense, guys? Is this logical? And please give a like in YouTube. See, I'm okay with this short from here and going for this or that. Either one is okay in my book. This is okay for me. Because why? I'm just going to give you some thinking, not what's correct, because it's all random. This could be the ultimate target, and you missed this by a couple ticks, and you want to hit yourself with that, with a broomstick. Haven't we all done that? Where you have your target and you're unable at your target, and you say, you have those nice choice words. Yet it's random, but you have an emotional response. So what I know is this is likely, and I know this is likely. So I'm reasonably good with this. Doesn't matter. It's not a recommendation. And by the way, where's the microstructure? You do remember it's right there. Let me put a little line on it for you, just so you see how you can do this. Too high. So here is too high. This is too high. This is too high. So these are resistance. And it doesn't mean we won't come there. I could do whatever. This is support. It's right there. Just showing you now. I'm showing you fractals. And in the higher time frame, this is the same as that higher time frame. Okay? So you can kind of see what I'm doing. And I can't tell anything in the sense of what will happen. I cannot tell here that it's a short. I can suspect based on the order flow, look at all the icebergs here. So I'm watching the icebergs of seeing the absorption, and I'm seeing the buyers. So these guys, all this buying, this is all absorption. There's a seller right there. Iceberg, absorption. Here's my trigger. You see how it all comes together? Seller, trigger, back here, absorption, short, resistance, support, support, and this is where we're trying to go. We'll see what it does. Is this all making sense, guys? So I don't use indicators because what's my indicator going to tell me? Where does it tell me to get short? Well, I'm looking for the short right here. There's a trigger. Comes back up. I'm looking for the selling. I could be short here, 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 here. I mean, there. This, you got to know what you're doing. Could be short in here. This, subject to your skill set, this is a short. Or there. Nothing wrong with these. There. So there. That's it. And scaled. So that's it. Now you know everything I know. Well, some of what I know. What do you guys think? Moses, did Moses find the stream? Hers exactly. Yeah, I don't see an IBC Moonwalker. We are in balance. We have hit our target. This became a primary target. It wasn't early on for me. In fact, it wasn't a target. This was my top side target, which, as you guys know, that was. But once we came back around again and it changed, then this became the target. And if we get through here, this could be a target. But I'm in mean reversion now. So, this is not easy to trade because it changes, I mean, that is, it is what it is. So what do I have? If I get through here and I get through here, I have this down here. This can go. This is stale. I'm going to get that out of here. So I got this because it was a VPOC location, volume point of control. So the highest volume has more meaning to me. If I can get below all this, get under here, then I'm looking for it to fall out the bottom. And, But my main concern, if you will, is this. This trade could be done here or even here. Doesn't matter. This is support. Buyers are here. See the absorption. There's my icebergs. So now we can sit here and bobble around. Outside edge, low volume node is out here. Low volume gets picked because they're outside edges. So we can come up there, pick. I call it a pick. It's like a stop pick. It's the rotation. So think of outside edges of consolidations. Whether you're seeing it in the microstructure, this or this, it's all the same. We can come out here and the resistance is really this micro high volume there. So this high volume, so if I come through here, I can come up here and even here. And the trade is not busted yet. Your stomach lining, might be time for Pepto-Bismol. On the trade desk, you should have seen the bottles they would bring in of Pepto. It was kind of interesting. We also had a Magic 8-Ball. That was always fun. Tom, what do you think it's going to do? Oh, I don't know. I think it might do this. Let's ask the Magic 8-Ball. All right. What does it say? Ask again. So that was useful. The only problem we had with the Magic 8-Ball, somebody grabbed it and was going to throw it, which every once in a while they actually in the storeroom, we had keyboards. You can imagine that. Any final questions, guys? I got about 5 minutes, and let me remind you, if you're visiting in YouTube, there's a link down there. If you're interested, there is no cost. You can join the Bookmap Discord Trader Lab community. It is a group of like-minded traders who come together to leverage their collective experience. We've all done a lot of similar stuff and different. So if we can take that experience and put it together, we can leverage it. Because the goal is to get better. And also, not keep doing things that don't work and believing. And this is part of the thing about belief. believing, it's persistence, tuning, tweaking. All I got to do is make it better. Look at that. I caught that 20-point rotation last week. I'm going to go back and look at those, so next time I'll get it. Meantime, you're going to continually go back and tuning and tweak. That is Trader Groundhog Day. What you're doing is you're curve fitting. That does not have an edge, potentially. Because maybe you do, but if you may take 10 losses trying to get that one rotation. That will take you out of the business. It is not one trade. It is all of them. And that requires work and reverse engineering to find out where your edge lies. The idea of this business is not to make up games on the fly, not to play a video game, but to already know where your trade will take place before the market gets there. This is one of them right here. Coming back here, targeting is the trade. And then down here, because there's stops, and potentially you're going to get retail buyers here. That's the trade. If we clear through here, now if you're running a 2-lot, and this is not a recommendation, you'd scale to get risk neutral. This could be your primary targets. The trade is over. If you're running, or, here's the or, you're risk neutral, and you're just going to hold a runner and manage it. Or you're not risk neutral. You're going for this for your scale because of the possibilities. That's all up to your plan. What is your plan? Or do you not have a plan? If you don't have a vetted structured trade plan, you're sitting with the gamblers. And of course, you may be very successful. That's okay. In fact, if you are without a trade plan, come to Trader Lab, because we all want to get better. Please give a like in YouTube, and remember, the Bookmap Discord Trader Lab there's no cost for it. There is also a free digital version of Bookmap you can download, and you can also, if you subscribe to the free version, you can also attend the Bookmap Academy, which is specifically for Bookmap subscribers. I think it's kind of a loophole that if you're not a paid subscriber yet, you can still attend it. I don't make the rules. But while that's still available, I would suggest maybe you think about that, especially if you wanted to get your hands on a high-tier order flow tool like this. And then you can attend the Bookmap Academy, where you can get coaching and mentoring and see what other traders do. You know, I think that's pretty cool. Please give a thumb up in YouTube, and remember, in the Trader Lab, there are 60 PDFs of these structured trades. They're available also, as well as a library of webinars. You can access all of these through the link in the bottom of YouTube. I think it's pretty good. I'm not a vendor. There's no course. It is really a community effort, and there's a lot of posting of trades, screenshots. It's not a trade calling room. It doesn't do you any good for somebody else to do the work. If you can't stand on your own and you don't want to build a career in this business, then probably Trader Lab wouldn't be for you. This is really about self-sustainability and dealing with all the elements and gradually building out the business. If that's your interest, I think you can learn to trade if you have the capacity and the fortitude, and you understand this requires skills that can be learned. If you're interested in learning about the business of trading, developing the skills, becoming part of a community of like-minded traders, take advantage of it while it's still available. Nothing is going to go on forever. Click the link in the bottom of YouTube. There is no cost. Thanks again, guys. Please give that thumb up, all the likes. Subscribe to the channel if you want to receive notifications on this stream and others. And I look forward to seeing you tomorrow. Have a great day, guys. Thanks again for visiting the Trader Lab. And here comes our target.